Permex Petroleum is a uniquely positioned junior oil and gas company with assets and operations across the Permian Basin of West Texas and Delaware sub-basin of New Mexico. The company focuses on combining its low-cost development of held-by-production assets for sustainable growth with its current and future blue sky projects for scale growth. The company, through its wholly owned subsidiary, Permex Petroleum US Corporation, is a licensed operator in both states and owns and operates on private, state, and federal land. Permex Petroleum trades on the Canadian Securities Exchange under the ticker OIL.
I'm joined now by Mehran Ehsan. He is the president and CEO of Permex Petroleum Corporation, trading on the CSE under the symbol OIL. Mehran, welcome.
Thank you. Thank you for having me.
Yeah, Mehran, let's start with an overview. What exactly is, it's kind of self-evident in the name, but what exactly is the business of Permex Petroleum?
Sure. Permex Petroleum is a uniquely positioned junior oil and gas company with assets and operations across the Permian Basin of West Texas and the Delaware sub-basin of Southeast New Mexico. We essentially own and operate oil and gas wells on federal, state, and private land.
Oh, okay, well, the Permian Basin is certainly a famous producing body of hydrocarbon. It's interesting that you are actively developing this in an environment of falling oil prices, especially, we just heard that OPEC decided to pledge to continue their diminishing output in an effort to keep prices from falling too much further. How sensitive is your company to that oil price?
I think there is no E&P company out there that would say we're not sensitive to oil prices. With regards to OPEC, you're absolutely right. 1.2 million barrels in cuts continues for the next 9 months. And as you'll notice, the environment's changed a bit where historically when OPEC comes out and says this, WTI and Brent go up, but this time it did not phase it as much, and that's because of the shale resiliency into the U.S., and that's the market we're in. So price sensitivity, we are price sensitive. However, we operate in an environment with some of the lowest operating expenses and some of the highest operating netbacks.
Sure. Okay, so let's go in depth on that. Tell me about the netbacks and the types of exactly what kind of pay zones you're working in.
Sure. So when you look at the Texas play, specifically West Texas, majority of the hype was created around the Wolfcamp formation, which is deep, requires much fracking, thus the cost is quite high. With us, it's more conventional San Andres wells. They're shallower, they don't require the same amount of fracking or operating expenses. So when you look at our operating netbacks, we run it at 45 oil WTI, and netback is around $29, which is quite healthy.
Wow, that is. Okay, so a lot of companies have really come from nowhere to become major sort of integrated producers. Continental Resources comes to mind. Is that sort of the ambition of Permex Petroleum Oil, is to sort of grow incrementally on increasing production?
That's absolutely right. And it's funny you bring up Concho. Concho is personally my favorite company out there. I have followed them quite well. We know them quite well, their personnel, one of the best operators in that region. The model we've looked at has been to be silent on the sidelines as a small junior player, don't take on debt, but take on a hawkish position where other operators are leveraging and struggling now in this environment. We would go in and start taking up some of their acreages in preparation for drilling and development as oil prices recover.
I see. So is your business model then typically to farm in as a financial partner? More so than
not necessarily. We are an operator.
Oh, okay.
That doesn't mean we won't farm in and do JVs. In fact, if you look at one of our properties, we're a working interest partner with Occidental Petroleum. When we proceed to do our drilling of horizontal wells, we will actually embark on utilizing their expertise as a large cap to drill them for us as our joint venture partner on that field.
Continental sort of became famous being among the most willing to spend rather prodigiously on large horizontal multi-stage fracs at depth that were, some wells running upwards of $20 million. That's not the case because you guys are more conventional, more shallow, as you say. So does that mean that you're not doing any multi-stage horizontal fracking?
No, that does not mean that. So the way you're looking at it is it's like comparing a well that you're injecting 20 million, doing a 50-stage frac on a 12,000-foot vertical hole and another 2 miles out lateral. Nothing like that is what we're touching. We do have basement rights on our leases, which allows us to do that, but Permex is not as of a size to do that at this juncture, nor would we want to risk putting 20 million in one hole, even if we could at this juncture. What we're targeting is a San Andres conventional play at around 5,000 feet deep, 1 mile out, with a 20-stage frac program. This would cost the company approximately $2.5 million to $3 million USD to drill and develop it. But when you look at the payouts on some of these wells, 400 barrels a day in production, the payout is less than a year at 50 oil. Rule of thumb, if the payout of a well is under 12 months, drill it. If it's over 12 months, walk away from it.
Sure. And what does the decline timeline look like on most of those wells?
That's another good question. So when you look at Continental going after Wolfcamps, have some of the steepest decline curves. That's why we always discuss shale. Although the shale revolution has been strong, one thing that people don't understand is the significant declines that these have. With the San Andres, you're looking at around 30% year-on-year decline in the first year, which the second year goes to around 15, then 7.5% grandfathers at that level.
Okay. Well, that's certainly better than some of those deeper fracs. How is the competition for acquiring those types of shallower projects? I would think you would have to pay more for something that's so much closer to surface and less risky.
Historically, that would be the case. But when you look at the hype and some of the production out of the deeper zones, it's like, think about this. Would the competition be more right now for demand for horizontal rigs or vertical rigs? Because the hype is around horizontal, demand for horizontal rigs is much higher than vertical. So one would actually be able to get the vertical rigs at a much discount to market. When you look at our shallower stuff, the production isn't nowhere close to what the large caps are doing at 2,000 to as high as I've seen 11,000 barrels a day from a well. You have an area that you can go into. That is why when you look at the San Andres, one of the main companies that focuses on it is Ring Energy. One of the other companies that does it is Pacesetter Energy. So you don't have that much of a hype around it yet, and that allows us to embark on it without that much competition still.
Sure. Okay. And tell me, how is Permex capitalized at this point?
So up to this point, we have utilized our cash flow for small incremental growth for the company. Moving forward, we're going to need to be able to raise either capital or do a convertible notes. One of the things our company has never done is, again, debt. That's one weakness that we don't want to have. However, given where we are, given the environment in the marketplace and where our share price is, we have to consider certain notes possibility for us to raise capital in order to drill our horizontals. As I indicated, each well will require $2.5 to $3 million. We would take 2 shots at net and anticipate to start doing this in fall sometime. So between now and fall, it's a matter of correcting our market, creating awareness, and getting us to a position to capitalize ourselves for that drilling program.
Sure. And from your planning perspective, where do you see the price of oil going in the near term?
I am not going to be speculating about that. Anyone that speculates now is going to be wrong, because you look at the corrections we've had over the past 60 years. We've had quite a few of them. They have been predictable to a degree. This round has not been. We've been downward correcting for 5 years now. And every time we have an upswing, there's another sentiment or fundamental or speculative or technical that drives it down. Personally, I don't think we're going to see 70, 80 WTI anytime soon.
Okay. And finally, tell me about the what's your production profile look like going out 12, 24, 36 months on a forward-looking basis?
Sure. So when we look at fall, if we were to bring on one of the wells, that adds 400 barrels to where we are. So our anticipation is 2 of those wells. If we do DNC, drill and complete 2 wells and put them on pump, and they're progressing nicely at 400 barrels a day each, we're going to be over 1,000 barrels a day for first half of 2020. This is where we're headed, and that's where we want to be, is to knock out 2, but we have room for 12 of these wells. Once we have had 2 under our belts, it becomes such an easy strategy for us to pursue the balance of the 10 wells on it.
Wow, so you envision being over 10,000 barrels per day within 2 or 3 years then?
If we are able to succeed, again, this is oil and gas.
Right.
It is risky,
Sure.
but we are not doing any wildcatting. We're not doing any exploration. This is all infill drilling. As a matter of fact, we're producing from that formation already. We're just tagging into it on a lateral scale. So if we have the funding to do it, we will do it and continue drilling them. If we do not, and we do succeed on the first 2 wells, we will use organic cash flow growth to drill the rest of the wells out.
I see. Fantastic. And tell me about your technical team quickly. Who's overseeing the design of the programs and everything?
So on the U.S. side, we have engineers and geologists. Our team is 3 engineers, 3 geologists spread across both sides.
Okay.
Nice pedigree that have done San Andres. In fact, when you look at our U.S. side, the main focus of our team has been this formation. In fact, they've done over 100 wells in the San Andres for other companies. So from an engineering side, we have experts that have done this over and over from a geological standpoint as well. Some of the team have worked with Gulf Oil, some of them have worked with Exxon in the past. But the main thing is boots on the ground and the experience within this formation. Those are the important things, and those we do carry at Permex.
Fantastic. All right, Mehran, let's leave it there for now. That's a great introduction to the company. We'll come back and follow your progress with interest. Thanks for joining me today.
Absolutely. My pleasure. Have a wonderful day.
Thank you, too.